Greetings, gearheads and stock enthusiasts. Welcome to Stocks Telegraph. The EV landscape is heating up, and today we're focusing on a recent bombshell, a game-changing deal between automotive giants Volkswagen and Rivian. This $5 billion joint venture has sent Rivian stocks soaring, and we're here to dissect the details and explore its potential impact on both companies. Rivian burst onto the scene with its revolutionary R1T electric pickup truck and R1S electric SUV. These innovative vehicles boast impressive performance, range, and off-road capability, challenging the dominance of traditional automakers. Rivian's focus on sustainability and cutting-edge technology has positioned them as a major player in the EV revolution. Volkswagen, a titan of the automotive industry, is undergoing a significant transformation. Recognizing the shift towards EVs, they're heavily investing in electrification and ramping up their EV production. This partnership with Rivian signifies their commitment to innovation and staying at the forefront of the EV race. The $5 billion joint venture between Volkswagen and Rivian is a strategic move with far-reaching implications. Volkswagen will invest up to $5 billion, with an initial injection of $1 billion and the remaining funds allocated to the joint venture over time. In return, Volkswagen gains access to Rivian's cutting-edge EV technology, including hardware design and electrical systems. This deal has investors buzzing, but what does it mean for the future of Rivian and Volkswagen? Leave a comment below. Are you bullish on the Rivian-Volkswagen partnership? Do you think this collaboration will accelerate the development of next-generation EVs? We'll analyze the potential benefits and potential challenges of this $5 billion deal. Stay tuned. One of the major benefits for Rivian is the critical issue it solves: capital. For months, analysts have expressed concern about Rivian's ability to navigate the infamous EV death valley, the period between high initial investment and achieving profitability. The Volkswagen deal provides a much-needed financial lifeline. Rivian reported a significant loss of $1.45 billion in the first quarter of 2024. While they possess a healthy cash and securities reserve of $7.8 billion, the need to conserve resources has necessitated layoffs and production adjustments. The Rivian R2 vehicle production will shift back to Illinois, and the Georgia plant construction is on hold. Founder RJ Scaringe even resorted to selling some of his personal stock. The $5 billion joint venture with Volkswagen alleviates these concerns. With this financial backing, Rivian can confidently proceed with the R2 production, aiming to achieve profitability on this $45,000 electric vehicle. This success can pave the way for the development of the lower-cost R3 model, still slated for Georgia production starting in 2027. For Volkswagen, the partnership offers a strategic advantage in the competitive EV market. The dominance of Chinese EV manufacturers has been a major concern for Volkswagen, particularly in the crucial Chinese market. This collaboration with Rivian allows them to leverage cutting-edge EV technology and potentially gain a foothold in the American EV market, which is still in its early stages compared to China. The deal secures Rivian's short-term survival by providing the resources needed to build the Georgia plant and continue development. This financial stability allows them to focus on innovation and production ramp-up. For Volkswagen, the partnership accelerates their EV development and strengthens their position in the global EV landscape. While Volkswagen-branded cars featuring Rivian technology won't be available until later this decade, this deal signifies a long-term commitment to EV leadership. While Rivian reported a significant loss in the first quarter of 2024, there are positive indicators suggesting future growth. The current stock price sits at $15.38, reflecting a 46.15% increase in performance over the last quarter. This upward trend is bolstered by the fact that the stock is still 45.21% away from its 52-week high, suggesting there's room for further growth. Analysts are cautiously optimistic about Rivian's future profitability. This year, the company is projected to experience a 13.15% increase in earnings per share, following a more substantial 34.66% EPS growth next year. This upward trajectory is further supported by an impressive 82.15% increase in quarterly revenue growth. These financial metrics paint a picture of a company on the cusp of achieving profitability. The Volkswagen partnership and Rivian's financial outlook are positive signs for investors. However, the EV market remains volatile, and Rivian is still a young company. Leave a comment below. Do Rivian's financial projections make you bullish on the stock? How do you weigh the potential rewards against the inherent risks of investing in a growth company? We'll offer some final thoughts and investment guidance. Stay tuned. The initial announcement of a $5 billion joint venture was significant, but the latest details reveal an even deeper commitment from Volkswagen. The German automaker will be investing a staggering $1 billion each year in 2025 and 2026, further solidifying their partnership with Rivian. This additional investment will be divided, with $1 billion going directly to the joint venture and the remaining $1 billion provided as a loan in 2026. For Rivian, this deal goes beyond just the financial injection. CEO RJ Scaringe emphasizes the strategic benefits, particularly the potential to leverage Volkswagen's global reach and established automotive expertise. This collaboration will not only broaden the market for Rivian software and zonal architecture, but also provide them with access to Volkswagen's extensive supply chain network. While Rivian already enjoys the backing of e-commerce giant Amazon, the partnership with Volkswagen brings a unique advantage: the automotive experience. Amazon, while a major player, lacks the deep-rooted expertise and established supply chain connections that Volkswagen possesses. This new partnership positions Rivian for significant growth by addressing a key challenge: scaling production and deliveries. The Volkswagen investment significantly alleviates Rivian's funding concerns, extending their financial runway and providing them with the resources needed to achieve their ambitious goals. Analysts like Alexander Potter of Piper Sandler are optimistic, reiterating a price target of $21 for Rivian stock. With the combined expertise of Rivian and Volkswagen, coupled with the additional capital, Rivian is well positioned to become a major force in the EV market. The Volkswagen-Rivian joint venture is a game changer for both companies. For Rivian, it provides a much-needed financial boost, critical access to automotive expertise and supply chains, and a global market for their technology. Volkswagen gains access to cutting-edge EV tech and a foothold in the burgeoning American EV market. This strategic alliance has the potential to disrupt the EV landscape and accelerate the development of next-generation electric vehicles. However, investing in Rivian still carries inherent risks. The EV market is volatile, and Rivian is a young company with a production ramp-up ahead. Investors should conduct thorough research, understand their risk tolerance, and consider seeking professional financial advice before making any investment decisions. Thanks for joining us on Stocks Telegraph today. We hope this in-depth analysis of the Volkswagen-Rivian partnership has been informative. If you're interested in the future of electric vehicles and the potential of strategic alliances within this industry, give this video a thumbs up and subscribe to our channel for more insightful investment analyses. Until next time, happy investing.